This show powered by AgriGold for Central Illinois, your AgriGold reps Brett Lahr. He is your AgriGold reps for Central Illinois. This is the Markets Club podcast. Welcome to the show for today's program. Thanks to join us. I am your host, Cesar Delgado. We were talking about the farm economy with Bruce Blyth from Farm Futures. The farm economy in the cash markets is critical to farmers and ranchers. We were discussing about this with Bruce. We were back with this conversation about the farm economy with Bruce Blyth. We were having a conversation about the farm economy with Bruce Blyth from Farm Futures. Bruce is an editor of Farm Futures for Farm Progress. Hey, Bruce, how are you today?
Doing well, Cesar. How are you doing? Good to talk to you again.
Let's talk about the sustaining in the beans markets for next few months with new administration about the sustaining tariffs to China. Can you explain to our audience about the beans markets?
Yes, well, that's a big question hanging over the soybean market and agriculture in general right now is what the incoming Trump administration means in terms of ag policy and prospect of tariffs. We went through a situation like this about 6 years ago, 2018. Trump slapped tariffs on several Chinese products. That instigated a trade war that was very costly for American farmers. Some studies have estimated that soybean and corn farmers lost somewhere in the neighborhood of 27 billion lost agricultural exports in the last trade war. And some Illinois economists are projecting, we could see a similar scenario next year or in coming years if that happens again. Illinois is saying soybean farmers could lose an average of 3.6 to 5.9 billion in annual production value. Corn farmers could lose a little under a billion to 1.4 billion in annual production value. So we've got recent precedent for this, and it's a major concern, and it couldn't come at a worse time for American corn and soybean farmers because, as you probably know, prices are already depressed. Corn and soybeans both near 4-year lows. We had big harvests in the U.S. that just completed. Second largest corn and second largest soybean harvests ever are pretty much in the bin at this point, and we've got probably a massive crop coming from South America in 2025. So the Brazil crop is expected to be north of 6 billion bushels, also a record. So we've got a heavy supply overhang for at least the next year, and that's got soybean prices under pressure where we hit close to a 3-month low this week. The lead futures are trading around nine, a little under $10, about $9.85 a bushel. December corn's at $4.26 a bushel. Both of those are well below the cost of production for many Midwest farmers, and it doesn't look to get much better in 2025, just with the large supply outlook alone. So it remains to be seen what's going to happen with the new administration. We're not sure about who the ag secretary might be and what the next farm bill will look like. But yes, it's definitely a growing concern for Midwest farmers. and U.S.
Did
farmers.
you report it that from some brokers about that in your reporting?
I'm sorry, can you repeat the question?
Did you report it that from some brokers about that in your reporting?
Yes, what I relating to you is based on conversations and research from brokers and analysts and farmers themselves uh, who are following these issues very closely. I'm covering the markets and following price activity very closely, and it's telling you that markets are likely going to be under pressure for some time now. And like I said, the U.S. harvest is pretty much wrapped up for corn and soybeans. Attention is shifting to South America. Planning is ongoing there for corn and soybeans. It seems to be going pretty well. They've received some recent rains in Brazil and Argentina that are helping speed things along in terms of early crop development. We expect probably the first supplies out of South America soon after Christmas and New Year's. That's when they usually start harvesting. So we got fresh supplies in the pipeline. We have seen pretty brisk export demand this fall for the U.S. It's for corn and soybeans and wheat as well. However, it's likely that will taper off after the new year as the South American supplies become available. So even though demand is actually very good for corn and soybeans, there's just a lot greater competition out there with the supplies coming from South America.
Bruce, did you hear about the cash markets in the Midwest for right now?
I've been following the cash markets. The trend generally has been steady to firm, and that's in large part due to strong export business, which helps boost basis levels at various locations, and the Gulf on up through the Mississippi and Illinois rivers. So China and Mexico have been stepping in pretty much every week with pretty good sized purchases of U.S. grain. So again, that's helping push the export pace up pretty sharply over last year's levels, and of course that lifts cash markets, the basis, the merchandisers, the elevators, the export people. They want to attract farmer selling. Farmers have been a little reluctant to sell with prices so low. So you're seeing cash bids getting bumped up across the Midwest. And again, that may sustain for a few more weeks, but we're already hearing that China buyers starting January appear to be backing away because they're concerned about the implications of the Trump administration's trade policies. That new tariffs may be coming, and that's sort of dampening the demand, the foreign demand outlook for the new year. So
how is the basis for right now without the Board of Trading in Chicago?
Well, it depends on where you look, but I think that any basis connected to export markets at the Gulf or along the Mississippi or Illinois rivers has been trending steady to firmer lately, as best I can tell. So, for example, yesterday you had You had barge elevators along the Mississippi where they boosted bids 1 cent. Illinois River location steadied a cent higher. Bids ranged from 1 cent under January futures to 12 cents over January. That's for soybeans. And corn, you got Mississippi barge elevator basis levels steady yesterday. Bids were ranging from 28 cents over December futures to 27 cents over March futures. So that seems, relatively firm. And you've seen a similar tone, I think, at like the mills and processors in Illinois and also at country elevator locations as well.
What do you think does that make sense with tariffs talk about John Deere and agricultural products? How is the supply and demand? Demand is pretty tight for right now.
Well, as I said, supplies are more than abundant. We're heading toward a record global soybean stockpile next year, according to USDA. Corn also pretty healthy. Demand, like as I mentioned, very strong across both crops. The ethanol industry has been running strong. Ethanol exports have been very strong. Soybean crushings, very strong. We just had a report of a record monthly soybean crush in October in the U.S. So, and that reflects a lot of new crushing capacity that's come online the last few years to meet growing biofuels demand. Again, and exports very strong. We're running sharply ahead of last year's levels in corn, soybeans, and wheat. Global economy is growing. So the economic fundamentals are, I'd say, generally pretty strong on the demand side for grain. It's just we are producing huge crops, and supplies are outpacing demand. We're going to need this strong demand to continue to whittle down the supply overhang, and before we see much of a recovery in grain prices. And that may not happen until late 2025 at the earliest, if not later.
What is the number of soybean? Could you tell us about that numbers?
The numbers in terms of production?
Yeah.
Okay. Well, USDA earlier this month, it released its November crop production report, unexpectedly dropped its estimates for U.S. soybeans and made a cut in corn as well. USDA is predicting 4.46 billion bushel soybean crop. Mm-hmm. Now that was down from 4.58 billion in the October estimate, and it would mean we are no longer expected to produce a record crop this year. Instead, it'll be the second biggest ever. So that caught the market a little bit off guard and led to, I think, a brief rally, but that's since faded. Yields were cut. Average soybean yield was cut to 51.7 bushels an acre from 53.1. That's a pretty good cut. So I think that reflected the hot, dry pattern we had across much of the Midwest late this summer. That took a little top off our yields. So again, still a very big crop, second largest ever. For corn, the USDA dropped production to 15.14 billion bushels from 15.2 billion in October. Average yield also taken down 183.1 bushels per acre from 183.8. Still second biggest corn crop on record. And ending stocks for 24-25, 1.938 billion bushels for corn. That's a pretty heavy supply overhang to take into the next year. And soybeans, we're looking at soybean carryout 470 million bushels, down from 550 in an October estimate, but still up sharply from 342 million bushels last year. So again, just underscores the large production and big supply overhang we are going to be dealing with in 2025. So that, it's going to hang over the market for some time now, and we will just have to see what happens over the winter in terms of South America and all these other geopolitical questions. Ukraine, ag policy, tariffs, possible trade war, China. So there's going to be a lot to keep tabs on this winter, a lot of news.
Do you have any final thoughts or recap of our conversation about the commodities markets and your reporting on the futures?
Well, I would keep, even though we're done with harvest, I would encourage everyone in agriculture, your audience, your listeners, to just stay engaged, stay on top of the news, because there are a lot of wild cards and unknowns that could move prices either way, very, very violently and very quickly. It's just, typically you go into wintertime and markets kind of slow down, trading volume dries up, but this year feels a little bit different with a new administration coming, the Russia-Ukraine war, and any number of factors out there. So just keep your ear to the ground, as I've heard farmers say, and stay on top of the news.
Thanks, Bruce.
Thank you, Cesar. I appreciate the opportunity to speak with you. And I wish happy Thanksgiving to everyone.
This is Bruce Blyth from Farm Futures for Farm Progress on the Markets Club. January feeder cattle dollar plus. 850 closing at $254.300. February live cattle dollar plus. 775 closing at $188.200. February lean hogs dollar plus 1.025 closing at $185.675. March corn minus one single quote 0 closing at $4.35 single quote 2. January soybeans plus 5 single quote 6 closing at $9.83 single quote 4. March Chicago wheat minus 4 single quote 6 closing at $5.64 single quote 6. March KC wheat minus 1 single quote 6 closing at $5.65 single quote 4. Closing quotes provided by Kyle R. Bumstead Branch Office Manager Erickson, Nebraska 308-708-7340 Allendale, Incorporated. The risk Thanks to Bruce Blyth from Farm Futures. This has been the Markets Club podcast with Cesar Delgado. Have a great day.